Welcome, dear traders. You are watching a recap of the Asian session on August 29. Stock markets show growth in the last week of summer. After Wall Street rallied the day before, Asian stock indexes continued to rise. Japan's index hit a two-week high. Australian equities rose on the back of commodity gains. Markets in India and China were also affected by economic and political events. As a rule, August is one of the most negative months for stock markets. Indexes usually end the last months of a summer in the red. In general, major U.S. indexes follow this trend. Wall Street is bracing for losses as the Treasury yields rise. U.S. Treasuries, in turn, are soaring in anticipation of another Fed rate hike. The Asia-Pacific region has its own triggers. The main one is the China's economy. Ahead of the release of China's Economic Activity Index, investors remain vigilant. August figures are likely to confirm that China's economy continues to deteriorate. At the same time, a number of U.S. data releases this week are expected to show a different picture. Markets will closely watch the U.S. indicators as they may shed light on the U.S. Federal Reserve's interest rate policy. Therefore, today's Asian session started cautiously and the U.S. dollar index even tested the support of 103.83. On Tuesday, the US dollar declined slightly against the G6 currencies. However, the volatile Asian session helped the greenback to change red figures to green ones several times and vice versa. Perhaps the euro's decline following the release of unexpectedly weak data on the German economy was one of the reasons for the change in the momentum. The Eurozone's leading economy saw its consumer sentiment index fall to its lowest level since May, and this sentiment put pressure on the euro. However, US dollar bulls and bears have been clashing and taking turns to make and move the trade in their favor. As a result, the greenback showed high volatility, moving within the daily range of 103.80 and 104.10. Notably, the US currency has been strengthening for 6 weeks in a row. It looks like it's preparing to close with another 2% gain in August. This week's fresh U.S. statistics show the resilience of the U.S. economy to aggressive central bank policy. The prospects for high rates for a long time increase, pushing the country's currency to another high. Data on home sales, GDP for the second quarter, and several reports on the labor market in the United States will be crucial for the forex market this week. Since the Fed's further steps will largely depend on the incoming data, markets will scrutinize this data. While investors anticipate optimistic news from the US-Japan's economy, unexpectedly presented several unpleasant surprises. According to reports released today, the unemployment rate in the world's third largest economy unexpectedly rose to 2.7%. The country's ratio of jobs to applications fell to 13 months low. In addition, Toyota Motor today suspended operations at all 14 of its assembly plants in Japan. The reason for the disruption of assembly lines was reportedly system malfunctions. Notably, Japan's auto industry did not delay production even during the global chip shortages. And this was one of the reasons why Toyota took the lead in global sales a few years ago. Meanwhile, the Japanese yen is under constant pressure from the interest rate gap between Japan and the United States. Low yields make the Japanese currency an easy target for short traders. Since the beginning of the year, the Asian currency has fallen about 11% against the US dollar. In the long run, this pressure may increase if the US statistics turn out to be robust enough. As for Tuesday's Asian session, the dollar-yuan pair is falling on the daily time frame within the range of 146.30 and 146.60. As a result, the pair has managed to move away from 146.70, its lowest level since November 9, amid a drop in the Treasury yields, a slight weakening of the US dollar, and a positive news from the Wall Street. Against this backdrop, the pair tested the support of 146.30 and strengthened near 146.5 this morning. Investors are watching for any sign of intervention by the Japanese authorities in the forex market. However, verbal intervention should first follow, and thus Japanese officials usually first speak of their concern about the yen's movement. If verbal interventions are no longer helpful, they start to act. There have been no such comments, including from Bank of Japan Governor Kazuo Ueda at the Jackson Hole conference. This suggests that the bar for intervention may have been moved by the Japanese authorities to the critical level of 150. Meanwhile, investors have already withdrawn more than $10 billion from Chinese stock markets. Goldman Sachs and Morgan Stanley have lowered their targets for Chinese stocks. However, the former has also warned of the risk that may spread to the rest of the region. Asian economies are already suffering from China's crippling economy. For example, Japan reported its first drop in exports in more than 2 years in July after China cut purchases of cars and chips. However, the slowdown in China's economic growth has some positive sides. Crude prices are bracing to fall amid lower demand for the world's biggest importer. China's deflation means prices for goods shipped around the world are likely to fall too. That's highly favorable for the United States, Europe and the United Kingdom, which are still struggling with the high inflation. At the same time, emerging markets such as India will get a chance to attract foreign investment that has fled the weakening China's economy. With China being the world's second largest economy, prolonged slowdown is more likely to hurt than help the rest of the world economies. For the antipodian nations, the market downturn in China is even more troublesome. The Australian and the New Zealand stock markets are also losing the opportunity to grow, while their main trading partner is unable to strengthen its market. Meanwhile, the Aussie and Kiwi have strengthened today. The Australian currency rose on the positive news from Wall Street, moving within the range of 0.6423 and 0.6456 during the Asian trading session. Against the greenback, the Aussie tested the level of 0.6455. However, the pair consolidated near 0.6440 amid cautious trading. The New Zealand dollar closed the trading session consolidation in the area of 0.5920. In anticipation of further moves by the US dollar, the Kiwi was moving within the range of 0.5901 and 0.5936. The Indian rupee has lost some of its earlier gains due to growing corporate demand for the US dollar. Last Thursday, the Indian currency reached 82.3. Today, it remained unchanged, holding in a sideways range around 82.60 in anticipation of the US and Indian GDP data. In India, inflation is still high. Consumer prices rose to a yearly high of 7.4% in July. Given that the Indian regulator's target level is set at 6%, we can expect further aggressive steps. And this may strengthen the rupee against the US dollar and the euro. And that's all for now. Leave your comments down below and don't miss our next video review. Remember that staying up to date is a key to success in trading. See you online soon!